so much for coming, everyone. I am so excited to be speaking with such a big crowd. So I actually feel really happy to be in Hong Kong because I used to live here and it's one of my favorite cities in the world. And I'm really excited to be talking to Philip today. I got to know him just a few minutes ago, and he's working on such a cool project. Maybe we can start off by doing a little bit of intro on who we are and what our projects are on a high level, and then maybe we can get going.
Perfect. Yeah, I can start. So, it's a pleasure to meet you as well. First time in Hong Kong, so it's great to be here. And I'll be heading out to the Hack Summit as well later today. So it's been awesome just like checking out the city, spending a few days here. Real quick on my background. So I got into crypto back in 2016 when I started the Carnegie Mellon blockchain group. I was the president there until I graduated from CMU. I then started a company called Block Venture after quitting my main 9-to-5 job 2 weeks in to go all in. I built that up. We were essentially an alliance of 41 different research groups and 44 venture funds in the space. I worked as an advisor to Solana, Moonbeam, Flow Network, working with these guys over a multiple year timeline, earning team tokens, and then did that for a little over 2 years until I sold that company to go all in on Elixir. And so real high level for Elixir, for people who don't understand or aren't familiar already. So Elixir is a modular DPoS network built to power order book liquidity. So what that means is, right, all these different order book-based decentralized exchanges, to date, there is no way for them to trustlessly bootstrap liquidity to order books, right? They have to go through one of the big 4 or 5 market makers and pay a ton of tokens and a ton of cash in order to get these guys to come in and put liquidity on the books. And so via Elixir, these exchanges can now come in and launch their own products that are powered by us within their own interfaces, and actually allow for any of their end users to supply liquidity to their order books. And so we have native integrations lined up with DYDX, Hyperliquid, Vertex, RabbitX, Bluefin, a whole host of, most of the largest perpetuals exchanges are building on Elixir. And so we have, I think, a little over 30 exchanges that are launching native features of their exchange powered by Elixir. So we have our own validator set. We have 14,000 validators roughly coming to consensus once a second. We post fraud proofs to Ethereum mainnet. So that's kind of like the high level of how it works. We just closed our Series B at an 800 million valuation. So we got in some strong names there and some good partners. And we're just ramping up to our mainnet in August. So that's the high level on me.
Wow, that's awesome. Congratulations on your fundraise. Quick intro on me. My name is Arisa Toyosaki. I am a co-founder of Sega. Sega is a DeFi protocol that focuses on exotic options, and my background is in derivatives trading. I'm a few years older than Philip, and I was in traditional finance doing trades on equity derivatives when I realized that there is a huge potential in running the settlements and the trading process on-chain. And so I started working on this white paper that handles the potential in the market by using smart contract technology on exotic option settlements and trading systems. And from that white paper, we created Sega. And today, Sega has handled over $400 million in volume. We also have one of the largest presence in the DeFi options markets. So we have anywhere between number 1 to number 3 in TVL, depending on the day. We create products that have both a principal protection feature as well as one of the best risk-reward yields in the DeFi market. And you can stake your USDC, USDT, WBTC, ETH, and staked ETH on our strategies and get up to, I think, 83% APY today. And we just launched one of our first RWA products a couple of weeks ago that was taken up by almost like a fantastic number of media. And we actually now allow for trading strategies on gold on-chain that is collateralized by WBTC, ETH, staked ETH, USDC, and USDT. So very excited about all these projects and all these new products that we're launching. If you are interested in checking us out, it's on sega.fi. So anyways, that was probably enough shilling for our projects. Maybe just out of curiosity, this stage is titled DeFi and Restaking. Restaking is obviously a really big part of the entire DeFi narrative, but what do you think are some key themes in DeFi, especially right now, given this market condition, and what are some new and upcoming projects that you've been noticing recently?
Yeah, well, I think so. First off, I think there's a bunch of different trends that are happening, right? I think Athena is a big one. I know that we mentioned that beforehand. Thinking about like taking this basis trade and being able to essentially arb it down is essentially what it is, right? So that is something that is going to be pretty interesting, and it's going to be awesome to see that roll out. I think continue to proliferate. So that'll definitely be a big trend. I expect some like copycat projects to kind of spin up on that end. One of the things, obviously, I'm like quite biased. All I do is like deal with order books all day. We're seeing a lot of kind of fragmentation of liquidity, obviously across all of these different layer ones, and so we're starting to see all of that start to get fixed through these like new products, like for example, Orderly Network. I don't know if you've heard of them. You now see like Vertex Edge. You see all these different exchanges, right, where we're coming in, we're plugging. We're currently powering like roughly 40 to 50% of the order book liquidity on each exchange that has integrated us, so like the 3 or 4 that are live right now. And what we're seeing is that these guys are going cross-chain and solving this fragmentation of liquidity issue, right? So now these order book exchanges are taking deposits from Arbitrum or Ethereum or Optimism, like any of these different chains, and they're having like this off-chain unified order book, right? And so we've been seeing there's like all of these different individual perp dexes are starting to move cross-chain, which is something that's interesting. When talking to Synthetics, so Synthetics is going to be moving to a order book model. They are currently like a GLP type product where you essentially can stake it, and then you're eating the gains or the losses of the traders, right? So you're the counterparty. So if someone comes in and makes $1 million, right, that comes out of the LP's pockets. They are moving to like an order book model powered by Elixir now, to where now anyone can actually plug in via APIs. They can arb to Binance, right? They can do order updates, which you don't need to be on chain, right? So they're not paying gas every single second. And from a market maker's perspective, that's huge, right? Because if you have to pay gas every single time you update, you don't want to update, right? Like you want to do that as infrequently as possible. And for every additional second of latency you effectively add to the system, you have to widen out spreads. So that's why these exchanges to date on the DeFi side that are fully on chain have never been as competitive, right? Like even like Drift, for example, like they're great guys. Like one of the things they've been working on is like, okay, how do we actually take a lot of this that is fully on chain, like in Solana, right? And move off like order updates so that market makers can update like 2 or 3 times a second, right? Which is like at like the minimum that you'll need to be able to support if you want market makers to quote like as tightly as like a Binance or someone like that, right? So there are all these like cool things that I'm seeing, at least behind the scenes, where it's like all of these there are like a lot of leading AMM names that everyone here is familiar with that are moving to like order books or like launching perpetuals, because perpetuals have leverage, right? So they can scale up. If people can just slide a leverage slider 50x, right? You're going to get 50 times the trade fees, right? As an exchange. And that's why like DYDX and these other big perpetuals exchanges have to like $2 to $3 to $5 billion a day in volume, right? Like they can just scale it up. And it's because there's all these degens that will come in and like just like it's a lot better than just like spot from an exchange perspective if you're going to look at like trade fees, right? So that's what I'm seeing, I guess, on the DeFi within the DEX landscape side. Obviously, restaking, I figure we're probably going to talk quite a bit on this panel on that, but that's obviously a really big threat as well. So we could dive into.
Yeah, I mean, that's super interesting that you mentioned this, Philip. And, I think liquidity aggregation has definitely become a huge theme as we get more traders in the DeFi ecosystem. I think one of the trends, and this is more on the macro level that I do want to mention, is right now DeFi does have a problem. And it's because it's so new that when the markets rally, when you see BTC, ETH rally, you actually don't see DeFi TVL increase significantly. Like in DeFi currently, we still have the same capital recycling over and over again across different applications. I think people are very short-term minded in terms of using apps that, for instance, has like a point system or like in a potential airdrop. People are there to just capture the first few weeks of a really high APY. And there hasn't been a lot of value in actually utilizing DeFi technology to create a benefit that is only that you can only feel in DeFi. I think perpetual dexes have actually tried to penetrate that problem, where they're actually trying to create a product that you can't really trade in CeFi, but as Philip mentioned, I think perpetual dexes often have like a liquidity fragmentation issue, and also so many perpetual dexes are starting to form. So keeping a good uptime, keeping a good liquidity on every single one of them, on every single name, is actually a really hard ordeal. And when you want to really capitalize on this benefit of DeFi and having access to low liquidity tokens and names and asset classes, you actually want something like Philip's product to aggregate all the liquidity across different platforms. I think that is a really key information to try to create a better ecosystem this year. I also think that another really big trend is to have products that have like a long-term value. And what I mean by long-term value is, we don't want the kind of yields that are supported by creating like a native token. We also don't want there to be like metrics and traction that are based on a potential airdrop. And so how do you actually create a real value? I think the markets are becoming more liquid, which means just a trading spot is no longer as profitable as it used to be a couple of years ago. And the value of derivatives, which are synthetic products that you create on top of a spot, allows you to take leverage. So perpetual futures is a derivative, or options, which is the right but not an obligation to buy or sell an asset at a certain time at a certain price. By mixing perpetual futures and options, you can actually create structures and strategies that gives you a really good yield, but it's not inflated by any tokens or any sort of point system. It's actually a real value that comes out of the price of the contract. And so I think that in order to increase the DeFi ecosystem and to make it healthier, it's really important that we understand the value of DeFi derivatives. And specifically, in my case, I'm passionate about DeFi options. And I think, if people can work more on learning about DeFi derivatives, DeFi options, I think this ecosystem will be a lot more stable and a lot healthier. So those are some of the thoughts I've had.
What do you think about Pendle? I'm curious. Are you familiar with them?
Yeah, I have the utmost respect for the Pendle team and the Pendle founders. I think that one of the really cool things they have done is to create a lot of different DeFi use cases. They obviously, I think, part of their TVL has been supported by a point system, and they do really lean into DeFi narratives, but they also come up with use cases that I think are really novel, and I consider themselves kind of as like a research lab at the forefront of DeFi. Like, they experimented with token splitting, they've experimented with RWA, they're experimenting with, rehypothecation in, what I would consider is slightly volatile, but I think that spirit of experimentation is also really important. I think the projects that I consider are unhealthy are like, those that realize that maybe 10 other projects are implementing the point system, so they feel pressured into creating that themselves. But there's nothing novel about the product nor the system. And I think if you're the one making the point system and experimenting in the market, you're probably doing something right.
Awesome. No, I was curious because I do think that like Pendle obviously has had like a crazy last few months have been like insane for their team, and I think a lot of it is around they're kind of capturing the point value. Like everyone's like FOMO around airdrops is like at an all-time high. Like everyone like points. For us, we have potions, right? It's like you almost need it as like this fuel leading up into your mainnet launch. Otherwise, it's like, it's like almost like, what are you doing, right? Because you can just incentivize so much, even like community engagement. You get people just like diehard advocates before the protocol even goes live. And then you see these bigger, obviously the airdrops, like Dimension, for example. No one knew what Dimension was until they did a huge airdrop, and now everyone knows what it is, right? It's a marketing and awareness tool. But I think bringing it back to like Pendle, right? Like 1/3 of Athena's TVL is Pendle, right? It's people who come in, they create this two-sided marketplace, right? Where people can for us, right? You can supply ETH into Elixir to this cross-chain liquidity product that we created. We launched it 2 weeks ago. We have like roughly 150 million that's come in the last 2 weeks. But they break that into, okay, well, there's people who want to earn yield on ETH, and they don't care about Elixir potions. And then there's people who just want exposure to Elixir potions, right? And then they create this two-sided marketplace where people can just come in and buy Elixir potions, or they can just come in and earn like a high yield on their ETH and not earn any Elixir potions. And then they create essentially this pricing market for these potions. And so I think it's interesting. I do think, so Pendle's going live with the Elixir pools in the coming weeks. They're when we're talking with them, they're thinking anywhere from like 250 to 500 million might come in just from like people speculating on like, oh, well now I can just come in and supply ETH and just get a 35% APY, right? I don't need potions, right? That's like a completely different subset of users from people who are like, oh, I'm bullish about Elixir. I'm gonna try to get exposure or whatever. So, anyways, I think it's really cool and something that's like not restaking that is pretty hot within DeFi right now.
Yeah, absolutely. Like I'm also, I don't know if you knew this, but Pendle has been around for 3 years, almost 4. It's incredible that they've really been working at it and like leaning into DeFi narratives for that long. And so, hats off to them. I think they're incredible. Maybe changing the tone a little bit about, DeFi trends. Like, how do you feel about, all the meme coins? And do you think it's here to stay? Like, what do you think the value of it is in this ecosystem?
Well, I think it's here to stay. Personally, I don't buy meme coins. I just don't have like the time really, but like, I think a lot of people look at crypto as kind of this potential, like, I can just put it all on black and like, make like 100x or whatever. Like people that are not like full-time in Web3, like if you're a retail participant, like a lot of if you look back like 5-10 years, right? Like the most successful use case of crypto has been speculation, right? Exchanges make money, wallets that hold the assets make money, staking parties where you can stake the assets make money. Like all of these parties, anything that touches speculation has done really well. And then now we're starting to see some of these like really innovative use cases. I think DeFi 1.0 is actually pretty innovative. Being able to lock up BTC and take out a USDC loan against it is something that is like without any sort of banks, like that is pretty 0 to 1, right? So I don't think we give ourselves enough credit for those, but I do think that like meme coins are just here to stay because there is always going to be a subset of people who are looking to just put it all in black and buy some coin. They think like, oh, it's Joe Biden or Biden, like this is like like this is probably going to go up heading into the election or whatever. Like that person, that market participant will always be there. But whether they're buying a meme coin or they're buying like a alt layer 1 that they think is going to go like you're going to get those speculative frenzies. Right now it's in meme coins, but it changes like all the time. So that's my 2 cents. I'm curious what you think.
Yeah, it's really interesting you mentioned this because I also think it's here to stay. And I actually think this entire meme coin trend, the value of memes, whatever, like, I think that's more similar to like the NFT side, cultural. But I think what's really cool is it actually created a significant use case in DeFi. I think one of the biggest values of DeFi is that it makes any token and any asset accessible to anyone. And if you had to list every single meme coin on a centralized exchange, the centralized exchanges will crash from all the operational overload. But because you can make your own liquidity pools on any AMMs, it's really easy to launch a meme coin just from like your own bedroom by yourself. And I think that really is the value of decentralized exchange. If you put it in a negative way, you're fragmenting liquidity and fragmenting people's assets and holdings. But it also means that you can really have ownership of your own project. You can really launch it on whatever platform, whenever you want. And you can do it by yourself. You have all these tools to be able to support an entire economy, a microeconomy by yourself. And I think that's a really cool thing that this whole meme coin culture is starting to prove within DeFi. And so the way I think the value proposition between centralized exchanges and decentralized exchanges will change down the line is centralized exchanges, I think, will be very institutional and for very large trades, a lot of bridging between fiat and crypto. But I think decentralized exchange is where all the activities will happen in terms of active trading, active positioning, and also creation of these like microeconomies that potentially would become a macroeconomy traded on a centralized exchange. But I really see the utility and the benefit between like DeFi and CeFi forming in this cycle, and I think that DeFi TVL is increasing at this exponential pace. And now yeah, like I'm really, really excited to see like all these DeFi exchanges be almost at the same level as like some of the top 10 centralized exchanges. Anyways, I think that, our 20 minutes is up here, but maybe like a few last things about what like Elixir is doing to support the DeFi ecosystem, and any like cool launches that you're about to have that you want to like mention it to anyone.
Yeah, so just to round out, I know we're over time. So yeah, if you guys are interested in learning more about Elixir, our website is elixir.xyz. We just launched our Apothecary, which is the version of our points program. So we're distributing 20 million potions to reward like parties who have been beneficial and value add to our network. I think, yeah, so we have our Apex is launching their Apex FAMM powered by Elixir next week, followed with Orderly. Orderly is launching Orderly Quantum Pools powered by Elixir. We essentially have this new ELX ETH product that users can now supply into. And it'll essentially backstop liquidity across all the different top dexes, right? So, you mint one token against ETH, you can redeem it for ETH at any time, and it's backstopping liquidity on, Hyperliquid or, Vertex or RabbitX or Bluefin or any of these other guys, right? And it'll be natively yield bearing, right? So that's something that we're launching alongside of our mainnet, which is in August. So definitely feel free to join our Discord, our Telegram, join our community. Yeah, definitely. If you have any questions about Elixir, I'm also happy to stay around for a few minutes after and answer any questions. But yeah, it was great meeting all of you, and hopefully, if you come over, you have any questions, it'll be nice to meet. And yeah, it was great meeting you as well. And thank you all for having me.
Yeah, thank you, Philip. Maybe a quick thing on Sega as well. We're actually launching a new product at 10 p.m. tonight. It's called the Sega Whale products. One of our very popular products recently was called the dual currency swap. It basically gives you a really high yield, and you can stake anything between USDC, USDT, WBTC, ETH, and staked ETH, and get an additional 20% to 90% yield on those tokens that you stake. And the underlying structure is powered by options, and it's specifically an exotic option that converts your assets to another type of assets if the market reaches a certain threshold. And so even if, for instance, you stake your USDC and the markets go down, you can buy ETH at a lower price that you're happy to enter into. And so this whale product has a really good level of market movements where if you stake your USDC, you're able to get anywhere close to like 30% APY. But then basically, if the markets go down more than 30%, you're able to gain you're able to buy your BTC or ETH at a pretty good entry point in the market. So if you're looking to just set it and forget it type of strategy, and you want to capitalize on this current market movement and to gain your yield when the markets are not moving, but to be able to enter the market when the markets are getting really interesting, you should definitely check out our new products. And if you're also interested in just another type of like really passive strategies, we have our fixed coupon notes where you put in your USDC, you can get up to 100% APY. This is a principal protected strategy where you're protected with 100% of your principal up until the markets drop anywhere from 70 to 90%, which is a really, really it's a less than 1% chance that happens within a 27-day time frame. And then you also get a really good yield on that. So check out these two types of products. Sega.fi is our website to look at all of these strategies. Anyways, I'm getting all the hand motions to tell us to stop talking. So thank you so much for coming and listening to our Fireside today. And I'll also be around if you have any additional questions. Thank you very much.